Moving to the second part of explaining how expanding triangles are functioning and how expanding triangles are forming. And while on the first part we laid down the grounds and the rules and the differences between a contracting triangle like you see on the upside A, B, C, D, E and an expanding triangle like you see here. On this part I would like to show you a classical example that happened on the Euro and Canadian dollar daily chart, with the mentioning that all these triangles that are expanding are quite rare. As a matter of fact, even this ideally expanding triangle is quite rare. It is the least common way that a triangle may appear, but that's another story. It should be just as a rehearsal of what we discussed on the first part, so make sure you go and check the first part as well. Just as a rehearsal, all the legs here A, B, C, D, E are corrective, and in the case of a contracting triangle they are pointing towards two trend lines, the A and C and B to D trend line, that are converging towards one common point in the future, but this A and C and B and D, they are expanding and they are not meeting any common point in the future. Now, usually a contracting triangle or a triangle appears at the end of a fourth wave or at the end of a complex correction or as a B wave in any structure. In this case, on the Euro and Canadian dollar, on the daily chart, take a look here, market makes a high and stops here, and just like that it moves and stops here, and just like that it makes a move to the downside here, wave A, and then reverses, but only to make a marginal new high, and this would be the B wave. This is tricky because at that moment of time, whenever you're looking at markets and the B wave there takes the previous highs, I'm talking about these previous highs here, then the tendency of a trader and human nature and psychology of the markets are pushing towards buying call options. Well, this pattern just reverses strongly and then goes and targets the lows. Take a look. These are the lows in the previous wave A. So taking those lows with 3 different candles, so 3 different days, those lows are piercing. Everybody's jumping now on the short side, or everybody's jumping now and buys put options, only for market to reverse and retrace and to go into the highs and to break the previous highs. Now, on a break of such previous highs with such a strong, such a big candle, with such a strong move, then everybody will have the tendency to look for markets in a bullish manner, but only for price to go and retrace for the E wave. And there you go, a beautiful expanding triangle. Everybody's short here at this very moment of time. We broke the lows for second time. Well, this is just the moment where the triangle ends, and from this moment on we're just looking at a market that is exploding just like that. Like mentioned on the first part, any triangle like this one too will move between the B to D trend lines. I would say that the D wave wave ends here, the B to D trend line and the A and C trend lines. They are not converging because the triangle is expanding like this. And if you really wanted to see a nice place for going and buying call options, then just look at the A and C trend line and then put it over test to buy call options by the time the A and C trend line is going to be reached. Well, I would say that this is the theory for expanding triangles. You have the differences now between expanding triangles and contracting triangles, but keep in mind that it is still a triangle, so the rules of a triangle should still be there. I'm talking about corrective waves. I'm talking about the fact that here we are having a new high and a new low and a new high and a new low, and when everybody's jumping here on the short side, it only means that this pattern here is completed and the previous trend should resume. What is the previous trend? Well, the previous trend is a bullish one to the upside. Well, the previous trend resumes. It is just a corrective wave or a consolidation pattern. Thank you very much for being here. This is fairbinaryoptions.com. We just concluded a mini educational series regarding expanding triangles and how to trade binary options with such a pattern. Look for the A and C trend line to come and to look for buying call options in this case here because the triangle is a continuation pattern, or buying put options if the triangle is a reversal pattern for the pair. Thank you, and these analyses and projects and recommendations are possible due to the help of our sponsor here, Lionknife. Bye bye.